Hi, my name is Doug Jones. I'm a mortgage lender at Mortgage Magic in San Jose, California. Now, I've been a lender for a long time, and I've worked with interest rates many years. And this current economy is starting to feel like an economy that people talk about in negative terms, and that was the Carter economy back in 1977 through 81. And that economy was really interesting because we had a lot of things going on. We had a thing called stagflation. Now, stagflation is the word that you will start to hear a little bit. It's brought about by high interest rates and slow economic growth. Now, right now, our economic growth is not slow. However, it's kind of difficult to measure because of the pandemic, and we'll have to wait maybe another year to see what it's really doing. But we may hit a stagflation time period. What caused stagflation? And these are the things I'm going to tell you what caused stagflation in 1977 are the same factors we're dealing with today. High oil prices, I'm sure you're aware of that. Government overspending, everybody got these free checks in the mail last couple of years. And rising wages, and a lot of people got good wages, that's good. But it kind of offsets itself with the everything else going up. Now, when I talk about mortgage rates, and I talk about that, and the mortgage rate today on a 30-year fixed rate loan is about 4.8. Now that doesn't sound too bad in the history of mortgage loans. However, 3 months ago, this was around 3% or under. So it's gone up that fast. And in 1991, it actually hit 18.45. So all of these negative things up here, high oil prices, government overspending, rising wages, they affect a lot of times mortgage rates. And this is what happened in 91. Now, I actually did a loan in 1980 for a major celebrity, a person that if I said the name, everybody said, oh my gosh, I know that person. And I did, it was $1 million loan at 18%. And that was $15,000 interest per month, okay? Another thing is gasoline prices. Now, so the mortgage rates are going up now. Everybody needs to be aware of that. And the reason I'm doing this video, if you're going to buy and you still qualify, you really need to buy right now. You really do. Because these things, I looked at the trend of this went for more than 10 years, maybe 15 years. And it takes a long time to get these numbers down once they've gone up. Gas prices in 1977 was 62 cents a gallon. Well, 4 years later, it had doubled to 1.19, almost double. Well, so we've seen that recently here. Our gas prices a couple years ago, maybe $2.50, and I paid yesterday over $7 a gallon. So we're seeing the same type of things. In this year here, these years in 77 through 81, actually we had gas lines. Really interesting because the gas stations did not have gas, and they would have these little green or red flags. If they have a green flag out, then that meant they had gasoline. If they had a red flag, no gasoline. And you could only get gasoline on odd or even days. If your car license plate ended with a 3, it's an odd number, you could get gasoline on that odd day. And then if you're out of gas, you had to wait till the next day. As a matter of fact, when my son was born, we woke up in the middle of the night and we realized we didn't have any gas in the car, and we had to go to my mother-in-law's, who thank goodness lived close, and borrow her car to get my wife to the hospital. So, like I say, these are really negative things going on in the interest rates. I think the mortgage loan industry right now is completely flat, completely stopped. We're doing a lot of reverse mortgages, which is still a great loan helping people. I'm doing a lot of real estate, which is helping people. But the 30-year fixed rate refinance is really out the window. Now, I remember in these days also, the rich always get richer. I had a mortgage loan. My mortgage rate was about 9% in those days because I got it before this went up so bad. But I got an email, email, right? We did not have emails. I got a letter from my bank saying if you'll pay 4 payments this month, we'll give it to you interest free. If you pay 3, we'll knock off a quarter of your interest. If you pay 2, we'll knock off half your interest. If you pay 1, we're going to pay your regular interest. Because the banks also needed the money. They had these loans out there and they need the money. And the people who were rich, there were CDs in those days. CDs, a certificate of deposit. And they could go to the bank and they could get 15% on their money on a 90-day transaction. So that's what was happening. People were paying a lot here. Well, if they're paying a lot here in the mortgages, the bank has got these money. The bank's not going to be lending much here. Not going to be lending much. They need money to keep in business, and they had to pay out big numbers of money to just keep in business. So all of this says, it looks to me like we're heading back to the Carter years, those kind of years. The economy looks very, very bad from my point of view. I'm not an economist. I was a member of the National Association of Business Economists for years, but I'm not an economist, and I'm certainly not an expert. But I'm just telling you, I was there. I remember this. It was not good times as far as financing was available. It wasn't good times at all. And it's getting right now where most mortgages have just stopped. And you're going to see layoffs in the mortgage industry. I hate to say it, but that's coming. Anyway, my name is Doug Jones. My cell phone is 408-209-6773. If I can answer any questions, give me a call. I'll be glad to talk to you. I wish I had better news, but I really don't right now. Take care.